Are you thinking about buying or selling in the near future and are curious about your financial options in this market? No doubt many homeowners are nervous. The Fixin Vixens have been assessing the situation from their unique positions. Alex Bolton is a principal real estate broker. She and Annie have been flipping houses for years. This is a bonus edition of Fixin Vixens.
So, Alex, do you have any market tips for us? I know things keep changing and they're changing fast. So, do you have any tips for us today?
Yes. Right now in our market, I just got an email from a lender this morning, and he was saying that some of the larger lenders, for example, JP Morgan Chase Bank, my bank, is restricting, or they're making their lending requirements a lot more strict. They're going to require a 700 credit score and a 20% down payment. This is important because it directly affects a buyer's ability to purchase. This will be the new standard for buying a home with a larger company like that. Will be a 700 credit score and a 20% down payment. So I think that it makes everyone, it's going to force us to take a look at where we think our market's headed. And if it becomes more difficult for people to buy, then it's going to drive down our demand. So I think that this is something for people to keep an eye on. I think our market is in shock right now, but this is kind of the first step towards actual ramifications that are going to affect buyers and sellers immediately, and not just refinances and whatnot, which I think the lowered interest rates have been affecting more of a refinance position. And this is more of a purchase/sale position. So just something to keep an eye on.
Well, and that's something I was going to say is, wow, they tease us with these really, really low interest rates. Some of them at 0%. Or as close as you could get, but you can't get those. Look at this, but oh, by the way, nobody can qualify, or very few can qualify.
That is kind of a confusing misconception. That 0% interest rate that they've mentioned is 0% that the Fed is lending out to JP Morgan, for example. They're lending to Chase at 0%. And now Chase, so nobody, no common consumer, no buyer is going to get a 0% loan. The bank that they go to is getting a 0% loan. So that's been a little bit of a confusing misconception, and people thinking that there is a 0% interest rate possible. I don't believe that that is possible from what I've learned.
Well, I didn't believe it anyway.
Yeah. If it seems too good to be true, it probably is.
Yeah, it's the same. They say, oh, it's, they'll get you in there and then it's like, oh no, you're at 3.5%, 5%, which is still great. Don't get me wrong. Our interest rates it's something I've never seen in my lifetime. I'm sure, of course, you haven't either. Most people have not. So I'm not, that's wonderful.
And an economist actually predicted that the interest rate is going to stay low. I think it's at its lowest not in a long time, and that it will stay low. And they're actually even projecting the interest rates might get lower in the second half of 2020. But again, the lending restrictions are going up. So it's like, oh, that's great for the people who could already qualify for a great loan are going to get an even better loan. And now, average people a lot of them are going to be forced into foreclosure because they have not, you've been a month without income. And for most people that breaks your bank. And from what I've heard with forbearance options, they are making all of the payment due at the end of the forbearance. So anything that you didn't have to pay, you then have to pay at the end, like a balloon payment.
Right. I did reach out to my bank, and my bank is absolutely wonderful. We have a few houses, we have a few mortgages, and they've been really great. And it's exactly that. They're like, okay, these three will be due at the end of the loan payment. Which
is that great? Oh, you're saying at the end of your loan payment and like the very, very end of your 30 years. This will go on year 30.
Yeah, but I don't like 30. I'm usually a 15 or a 10 or a 15. For
example.
That is what they offered. It would be at the end of the loan, and it would just be, but again, it's for the 3 months. It's only for the 3 months. They've given the 3 months forbearance. It's due at the end of the loan.
So that is how like my student loan forbearance works, is they tack it on at the very end. And if you go for a loan modification, that's what you're negotiating with the bank, is that they basically put all of it on at the end. But the step before a loan modification would be, and my mortgager is more of a national company. And their forbearance was, okay, we're offering 6 months forbearance, but you have to be 90 days delinquent in order to qualify for the forbearance. And then at the end of the forbearance, so you have to be 90 days behind, then they offer you 3 months forbearance. And that's why they're marketing it as quote unquote 6 months, but really doesn't seem that way to, I'm like, oh, well, when you break it down, that's kind of.
But that hurts your credit also.
Yes. And they were saying that it's all due at the end of that 6 months, not at the end of the loan. So, so that's a national company compared to a medium-sized bank. But, I'm like that. I hope I'll be able to get through this without needing a forbearance. But anybody that does, I'm like, well, if I had the money to give you in 6 months, I probably would have had to have been setting it aside over that time. And therefore I would have been making my payment. That doesn't seem like a feasible option for me.
So I guess what I would recommend then is that everybody reaches out to their bank and ask them, start the conversation. I did it quickly. I started the conversation quickly because I know you and I both sort of realized that this is going to may go on for a while. And with everything that we have on the line, we needed to think ahead. So again, each bank I think is different. And mine was, I'm happy. We haven't had to do that, but I wanted to know all of our options right up front, just in case something happened and we did have to take that option. Because flipping is a risky business.
Going back to the original point where they're making the restrictions to lend more difficult or a higher standard for lending. I think again that is going to have an impact on our buy and sell market, on a more local effect if more lenders follow suit with that national play that they've taken. Or I'm sorry, the play that the national banks have taken.
Well, I know that in our earlier episodes, you and I talked, we both knew that there was a bubble. When that bubble would burst, who knew? But I sold most of my properties because it was so high. I was like, okay, this is sell high, buy low. So we kind of saw it coming, but no one could have predicted this. This is like, boom, overnight.
Yeah.
So it's been startling. I'm just really glad that I didn't keep all of our properties because it would have been so tough to have tried to have juggled all of this. I just consider myself lucky.
Well,
the market was so good, I had to sell.
I fortunately didn't have any active flips or rehab projects or anything that I needed to sell in order, to not lose my A on it. I agree feel like our market is still in a little bit of a shock and the house values have not dipped down that much. They have a little bit already. I've seen people accept lower offers just for fear of what's going on. So there already has been a little bit of a dip in sales prices. But I personally have decided to sell this home here to try to capitalize before the downswing and hopefully free up some cash so that I'm able to purchase again when I feel like the market does start to actually experience the ramifications from this, because everything in real estate happens like 2 or 3 months later. If you list your house, you're not done until 2 or 3 months later. So I think that it's going to take a couple months for the banks to start kicking people into foreclosure and or loan modifications or short sales. But I would like to personally free up some cash, and I feel like our market is still in a bit of a shock to do so. So that's my plan. If you guys want to discuss your investment portfolios, your personal home, we're here. We're happy to go over your options with you and share our stories and what we've learned as well.
If you have a real estate question, reach out at a2@fixinvixens.com. That's the letter A, numeral 2 at fixinvixens.com.